Hello everyone, this is Dr. Mir Shah once again with another video. In this video, we are going to solve November 2024 university question paper under the subject financial account. Since there is a limitation of time, so the entire paper won't be solved. So from each question, one of the topic will be solved. Okay. So let us see what are the important and most easiest questions in this paper, and let us see how to solve them in the most efficient manner.
Question number 2B reads as Mayank Limited issued 3,50,000 equity shares of 20 each. The issue was underwritten by Madhav, Mehak and Manav. Madhav 1,50,000 shares, Mehak 1,50,000 shares and Manav 50,000 shares. In addition, there was a firm underwriting as under Madhav 3,000 shares, Mehak 2,000 shares and Manav 2,000 shares. The company received application for 3 lakh shares including firm underwriting and marked applications. The number of marked applications were as 1,40,000, 1 lakh and 18,000 respectively. They asked us to determine the liability of each of the underwriter if benefits of firm underwriting is given and not given. So we are going to first start with when benefit of firm underwriting is given. So the columns will be particulars, basis, Madhav, Mehak, Manav and total. We will start with always with gross liability. That is the amount of shares that they are ready to take up. So which was 1,50,000, 1,50,000 and 50. So gross liability 1,50,000, 1,50,000, 50, total 3,50,000. So the ratio which comes on gross liability will be 3:3:1. Less mark application, we have 1,40,000, 1 lakh and 18,000. So we are taken as 1,40,000, 1 lakh and 18,000. Total is 2,58,000. We subtract it, we get the balance. So 1,50,000 minus 140 is 10,000. 150 minus 1 lakh is 50,000. 50 minus 18, 32,000. Total comes to 92,000. Less unmarked application. Now unmarked, how will you get? Remember, they have given you the total application. From total application, we will less the marked, less the firm underwriting, and whatever balance you get will be the unmarked. So from 3 lakh, you minus marked, which is 2,58,000, and firm underwriting, which is 3 plus 2 plus 2, that is 7,000. So we get unmarked ka total amount as 35,000. This 35,000 have to divide in gross liability ratio 3:3:1, which comes to 15,000, 15,000 and 5,000. We subtracted, we got the value as -5, 35 and 27,000. Total comes to 57,000. Less firm underwriting. Now when benefit is given, we take the given rate. Okay, we always take the given rate for firm underwriting 322. So we are taking that. We subtracted, we get -8, 33,000 and 25,000. Total comes to 50,000. The moment you get any negative, we will have to negative mean whatever shares were given to him, he has sold way more than that. So that excess you are going to credit adjust. Okay, so let's credit adjust 8,000 among Mehak and Manav in the ratio 3:1. So 8,000 will get divided in 3:1, that is 6,000 and 2,000. So the balance will become 0, 27,000, 23,000. Total comes to 50,000. Last step, add firm underwriting. So we add the actual ones which are given 3,000, 2,000, 2,000. So the total what we got is 3,000, 29,000 and 25,000. Total comes to 57,000. That's the net liability as per when benefit of firm underwriting is given. Okay, you all can go through it once. This is the first part when the benefit is given. Okay, now we will start with when benefit is not given. Okay, now let us check when the benefit of firm underwriting is not given. Now when benefit is given not given, the only difference is, again as I told you, is and the step number F. So the A to E, all the steps remain same. Okay, 1,50,000, 1,50,000, 50, that is 350. Less mark application 1,40,000, 1,18,000. You subtract it, we get the balance. You minus the unmarked, we get the balance. Till here it was same in the previous and in this slide is exactly same. -5, 35 and 27,000. Now when benefit is not given, the firm underwriting total was 7,000. That has to be divided as per GL ratio. When benefit is given, we take the actual, but when benefit is not given, we take the GL ratio. So that is 3 is 1000, 3000 and 1000. We subtract, we get -8, 32,000 and 26,000. So since we have a negative value, okay, we'll adjust that. So let's adjust credit. 8,000 get adjusted in the ratio 3:1 for the remaining two. So that is 6,000 and 2,000. You subtract it, we get 0, 26,000, 24,000. Total comes to 50,000. Lastly, we add back the firm underwriting. So here at this step, we have to take the given. Only it's on step number F. When benefit is given, we take actual, and when benefit is not given, we divide as per GL ratio. So we add firm underwriting as per the given ratio. That is 3,000, 2,000 and 2,000. Total is 7,000. Then we add up, we get the total value is 3,000, 28,000, 26. Total comes to 57,000. So this is how you have to solve the sum when benefit of firm underwriting was not given. You can go through it once. Okay, so this is how you have to solve question number 2B, 15 marks. One when benefit was given, the other when benefit was not given. So I hope everyone has understood that. We'll go ahead with the next sum.
Now the next question, question number 3A. Meenakshi Limited imported goods from Magnus Enterprise, Chicago worth 50 lakhs on 20th Feb 2024, on which the exchange rate was 85 and the payment for the same were made as follows. So they are giving you 5 different dates with 5 payments of 10 lakhs. Meenakshi closes books on 31st March every year. The exchange rate on 31st March 24 was 81.5. Pass journal entry and prepare foreign exchange fluctuating account. First in this, let us try to understand how you need to prepare the journal entries. So first thing, you have imported means purchase on 20th Feb 24 $50 lakhs at the rate of 85, which comes to 42 crores 50 lakhs when you multiply them. The entry will become purchase import account debit to Magnus, amount 4250 on both the side. Okay, so first entry you're purchasing, that will come. Now we are going to make the payment. So when you are making the payment, we have to keep in mind two things: whether you have made a gain or a loss. That's very important. So when you're paying on 20th March, that is still in the same year, you're paying 83.25. So always compare. We purchased for 85, but we are making payment of 83.25. So we are paying lesser. If it is a lesser, it is a gain. So 1.75 rupees less, so that becomes gain. 1.75 into 10 lakhs, that is 17,50,000 ka gain. 10 lakh into 83.25, that is the bank amount. Entry, whenever there's a gain, FEF will always be credited. So my entry will be Magnus account debit to bank to FEF. Under bank 83 we have 8 crore 32 lakhs 50,000. FEF is a gain, that is 17,50,000, and when we add up we got 8 crore 50 lakh as the amount to Magnus. Now next is on 20th April, but 20th April comes after 31st March. So first 31st March we need to pass something called as an if entry. So if we had to make a payment on 31st March, we had to make 81.5. So if I would have made 81.5 on the balance value, I would be in a gain position of 3.5 rupees. So 3.5 into 40 lakhs, which is the balance, we got the value as 1 crore 40 lakhs as the gain amount. That is again an if entry, if I would be making. So on 31st March, we are just trying to find out on that particular day whether I was in a profit position or in a loss position. Okay, next. So the amount would be 1 crore 40 lakh, 1 crore 40 lakhs. Now up to the year end, we had two FEFs gain. Okay, I had 17,50,000 and 1 crore 40 lakhs. So both are gain. Gain mein FEF is on the credit side. So when you're going to transfer, it will become on the debit side. So FEF to PNL 1 crore 57 lakh 50,000, 1 crore 57 lakh 50,000. Year gets end. So this is like the first part. Now when you're going to start with the second year onwards, remember 31st March 81.5, that becomes now the base rate. So we cannot now take 85, we'll have to take 81.5. Okay, so 81.5 is the rate at which we have purchased, and now we have to make a payment on 20th April for 82.5. So 81 I have purchased, I'm making 82.5 ka payment, so that's a loss for me, 1 rupee ka loss. So 1 into 10 lakh ka loss, multiply 10 lakh into 82.5, we got 8 crore 25 lakhs. Entry में FEF, whenever there's a loss, FEF will always be debited. So 8150, so my entry will be Magnus account debit, FEF account debit to bank. 8150. Okay, 10 lakh and 82. So remember, whenever you're passing these entries, these amounts which we are doing in the working note are all bank amounts. So if it is gain, like in the previous case, we add up and we get Magnus, and if it is on the opposite side, we subtract and we get the Magnus ka value. Next 20th May, we are making a payment at 81. So we purchased for 81.5 and I'm making a payment of 81, so I'm paying less is my gain. Entry will be Magnus account debit to bank to FEF. 8 crore 10 lakh 50 lakhs, 5 lakh we added up, we got 81, 8 crore 15 lakhs. Next, in June, we are making a payment of 83. I'm paying extra. It's my loss. So loss mein FEF is always debited. Magnus account debit, FEF account debit to bank with their respected values. And lastly, they are given 27th. You're making the final payment of 10 lakh at 82.7. That is again, I'm making a higher payment. It's a loss. Entry is same. Magnus, FEF to bank with their values. Now, last entry, 31st March, year ending. Check. We have one loss. We have second loss, third loss, and one gain. So we add up all the losses, we less the gain. It's still a loss. Loss mein FEF is debited. When you're transferring, it will be credited. So PNL to FEF, the amount comes to 32 lakh 50,000, 32 lakh 50,000. This is how the journal entry was supposed to be passed for this particular sum. You can go through it once. Okay, now we'll be taking up one more last sum from this particular paper, that will be question number 4. On 1st April 2023, 12,000, there was a correction. There's supposed to be 5,000 11% debenture of 100 each of Meena Limited were held as investment by Mrs. Menka Mistry at a cost of 4,80,000. The following other transactions and of purchase and sales were given. So there are 2 purchases, 2 sale. Meena Limited pays interest on 30th June and 31st December every year. You are required to prepare investment account. So I'm writing here investment account in 11% debenture. Interest due is 30th June and 31st December. So we have made a number line. April, May, June. June is the due date. July, August, September, October, November, December is the due date. There are 2 purchases, 2 sale. So I'm written here on 31st May, first purchase. Then 30th August, first sale. November, we have again a sale. Okay, and we have on 28th Feb our second purchase. So this is our number line basically. So we'll go by number line, and on 1st April they are given us the opening balance. So I'm writing here from the date wise, from 1st April 23 to balance. Working note number 1, we jump to working note number 1. There are 5,000 units. So the nominal value will be 5,000 into 100, which is 5 lakhs. Capital amount given is 4,80,000, so we have written it here. Interest is always on nominal value. So 5 lakh into 11% into how many months? So the question is, when was the interest last paid? We are in April. December was the interest which was lastly paid. So 3 months, so into 3 divided by 12, we got 13,750. So nominal value we have written here 5 lakh, interest 13,750, and 4,80,000 is the cost. That's working note number 1. So we are done with the opening. Now we come to 31st May, that we are purchasing. So working note number 2. So purchase May, I'm writing here 31st May to bank purchase. Working note number 2, units. How many units have we purchased? 2,500 at 98x interest. So 2,500 unit into 100 nominal value into 98x interest. So do nothing. We got the capital value. Interest is always taken on nominal value. So 2,50,000 to 11%. When was the interest last paid? May. So December, Jan, Feb, March, April, May, 5 months before. So 5 into 5 divided by 12, we got 11,458. So all these values we just have to substitute here. Nominal value, interest and cost. Next, after that comes June due date. So due date mein, working note number 3. Due date mein only on the buy side 30th June, buy bank due date. There will be no nominal value, no cost, only interest. Interest on what all things were present. So we had 7,50,000 NV pending and we didn't sold till now anything. Into 11% into 6 divided by 12, so we got 41,250. June is done. Next is August, 30th August, where we are selling. Working note number 4. So I'll write here 30th August, buy bank sold, working note number 4. How many units are we selling? 1500 units at the rate of 104 come interest. Come interest may we have to always less interest from the capital value. 1500 into 100 is 1,50,000. 1500 into 104 is 1,56,000. Interest was 1,56,000 into 11% into when was the interest last paid? It was paid in June. So July and August, 2 months. 2 by 12, so we got 2750. You minus 2750 from the capital, we get the balance. We put the balance down. 1,50,000, 2750 and 153,250. Now, the moment you sell, we need to find whether we have incurred a profit or a loss. So for cost, the formula is NV of sale. Whatever you are selling, uska NV. Upon total NV, at that time only these two are present. So 7,50,000 into the cost. So in cost, 4,80,000 plus 2,45,000, that comes to 7,25,000. We multiply, divided, we got the value as 1,45,000. That is the cost price. We sold it for 1,53,250. So we are selling at a higher price. We are getting a profit of 8,250. So we are noting down 8,250 on 30th 8,250 as a profit. After that, another sale in November. So working note number 6. Again we write 30th November, buy bank sold. 1,200 units, X interest 96. So 1,200 into 100 is 1,20,000. 1,200 into 96 was 1,15,200. 1,20,000 into 11% into 5 divided by 12 comes to 5,500. So we got that values. Once that, again we need to find whether we have any profit or loss. So cost, again NV of sale 1,20,000 upon total NV. So that was 7,50,000 minus now 1,50,000. So that's 6 lakhs into 4,80,000 plus 2,45,000 plus 8,250 minus 153,250. Okay, so we get 5,80,000. So when you divide, when you multiply, you got the value as 1,16,000. That's the cost price. Selling price is 1,15,200. So I'm selling at a lower price. So we have a loss of 800. So I'm writing here on the same date by P&L loss, 800 ka loss. After that comes December due date. So due date is again here 31st, buy bank due date. Only interest now, interest on only on the balance. Okay, interest will be only on the balance part. So balance was how much was the balance? We had 7,50,000 minus 1,50,000 minus 1,20,000. So that would have been 6 lakhs and 4,80,000. So 4,80,000 into 11% into 6 divided by 12 half yearly. So we got the value as 26,400. That's it. One last thing, purchase in the month of Feb. Feb May you're purchasing 2,000 debentures at 100. So 2,000 into 100 is 2 lakhs. Okay, 2,000 into 96 x it's come interest. So we first find the interest. So that will be 2 lakh into 11%. When was the interest last paid? It was paid 2 months before. So into 2 divided by 12, we got the value as 3,667. So then 2,000 into 102 minus 3,667, we got the value as 200,333. But once that is done, we just have to do the tally part. We added the tally NV amount 9,50,000 minus these two values, we got the balance at 6,80,000. On 6,80,000, 11% interest for 3 months, we got 18,700. We added the interest part and we got the balance as 65,725. Cost we added up, we got the value 9,33,583 minus the remaining, we got 6,64,333. So this is how you all had to solve the sum based on investment account. Okay, chalo. I hope everyone have understood this. With that, we'll be ending this video here.